Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about Bitcoin, comparing the cycles. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out Into the Cryptoverse Premium at intothecryptoverse.com. Let's go ahead and jump in. So, as we've compared the cycles in the past, I thought it would be somewhat useful to compare them in several different ways in this video to try to get a better understanding of likely outcomes for 2023. Okay, now what we're going to do to try to better understand likely outcomes for 2023 is we're going to look at what the data says, my own experience, and of course you can take from that what you want. Now, to just give you a brief example of things that I've talked about before with regards to my own experience, sometimes it works out, sometimes it doesn't. A recent time where it would have worked out, of course, was back in the summer. It seemed like a lot of people thought June was the bottom. We said, that is a pretty typical feeling to have, and it's one that I even had in 2018. But normally, once you get closer to the end of the year, you see that sort of break down and no longer show that June was the bottom. And again, that happened again. But where it hasn't always worked out well is, from this cycle over here, it was very interesting because in this one, Bitcoin essentially held the bull market support band all the way up, right? Every single step, it held all the way up. And then finally, we broke down below. And then this one, it sort of worked, right? We said hold the bull market support band and we'll likely see a nice rally. And I was sort of expecting to retest this at some point, but we never really did until basically the cycle was over. So of course, every single cycle is going to bring something different. We have to be cognizant of that. It's not going to play out in the exact same way. So with that in mind, we will at least take a look at what does historical data offer us? What can you learn from it? What can be your general expectations for 2023? Now you might wonder, at least, why are we talking? Because we're going to spend some time talking about 2023 within the context of 2019 and 2015, and you might wonder, what is my fascination with this? But the main reason is because there are, a lot of parallels that you can draw between 2014, 2018, and 2022, right? So you have 2014 bear market, 2018 bear market, and then the 2022. And then so it sort of raises the question, well, why not do the same type of analysis where you compare 2015, 2019, and then 2023 as it unfolds, right? I mean, 2023 only just got started, but it's something that we could continue to compare with these prior years after the primary bear market year, right? So you had the primary bear market years of 2014, 2018, and 2022. Then you had sort of the phase after it where we more or less just chopped sideways for a year. Now remember, chopping sideways can mean a lot of different things to a lot of different people. Even in 2015, you could argue that we chopped sideways, but we still had 60-70% rallies off the low. Okay, in 2019, we actually had a 300% rally from the December low. So chopping sideways, of course, can mean very different things. So to be clear about what I mean by chopping sideways, what I generally mean is that we're likely not breaking any new highs this year. Okay, normally that comes, the following year or the year after that, if history is any indication, right? That's what history would show us. Doesn't mean it always has to play out like that, but until proven otherwise, it seems like it's worth to just sort of assume that history will continue to repeat. So if you go look at this cycle compared to the last two, it shows something interesting, right? Now, I understand that most people aren't going to measure cycles from the peak, and honestly, it's probably not a great way to measure them. And I will, be the first to say that there's better ways to measure the cycles. But one reason I like to visualize it like this is because it really does show a very familiar pattern, right? So you essentially go down for a year, you then chop around for a year, and then after that, you begin a new uptrend, a new sustained bull market, right? A sustained one that actually can lead you to new all-time highs. This is what history shows, right? But the first year coming out of this does not normally lead to it. You sort of chop around for a while. What's interesting is, and by the way, just to sort of address one thing, I know some people might ask, well, why are you not showing the first one? It's not because it's not just to sort of cherry pick the two that look the most familiar. It's just that this bear market, it did not last nearly as long. Okay. And so, the recovery out of it looked a lot different. And so, I think it's probably more worthwhile to compare where we are now with, the last cycle and the, coming out of it 2015 and then 2019 and of course 2023. So we have two cases where we can look at. Not a whole lot of data, right? Not a whole lot of data points to even look at here. You just have 2015 and 2019. Now, let's hide the current one and look to see what did 2015 and 2019 show us. What they showed us is that in 2015, in 2015, the bulls first got wrecked, right? Because we capitulated, and then the price of Bitcoin continued to sort of hug those lows for about 2/3 of the year. In 2019, the bears got wrecked first, right? So 2015, it was the bulls got wrecked. 2015, the bulls got wrecked. 2019, the bears got wrecked first. But then what you'll notice is what happened in the second half of the year. So in the second half of the year, later on, at least in 2015, it was the bears that got wrecked as price rallied up. And in 2019, it was the bulls that got wrecked as price ultimately rallied down. And that actually continued into 2020 when Bitcoin ultimately capitulated into this low right here, which was just a slightly higher low from the bottom it had in December of 2018. So while the path that these two cycles took during the recovery year after the primary bear market year of 2014, 2018, the path that they took was very different, very, very different. But by, say 800 days or so after the prior peak, they were both at essentially around the same level, right? Both of them. And that was about 60% down from the all-time high after about 800 days beyond the peak. 800 days beyond the peak, they were both sat about 60% below the all-time high. So what would that mean for Bitcoin, right? What would that mean for Bitcoin? And then, of course, the path to get there is anyone's guess, to be completely honest. But 800 days past this puts you all the way out. Sorry, let me switch this over to a daily time frame so we can get this a little bit closer. So 800 days, just to give you some perspective, I mean, that's all the way out in like February of 2024. And 60% down from the all-time high from there puts you at around 27K. 27K all the way somewhere out here, right? I don't know if I measured this completely right. So 815. Yeah, so sometime in the first quarter of 2024, which again also is more or less going to correspond with the Bitcoin halving. Okay, 60% down from that point. So then the question is what is the path between now and then? Sorry, 60% down is up here. So what's the path between now and then, right? How do we get to that point? Does it rally up and then come back down and then do something like this? That's more or less what 2019 did. Well, 2019 did something like this, right? It rallied up for a while, and then it capitulated for a while, and then it slowly came back up. 2015, we're already not following 2015, but 2015 sort of scraped the lows down here for a while and then rallied up at the end. So if you look back at this chart and we overlay the current cycle, at least as measured from the peak, we're sort of in this window where Bitcoin is likely going to chop a lot of people up. And I've said this before many times, right? 2023 is the year that both sides likely get wrecked, okay? And clearly it's the bears who are getting wrecked first. So 2019 and 2015 showed us that this is the blueprint, that one side will get wrecked first, the other side will get wrecked after that. And then after both sides get sufficiently wrecked, then we're pretty much primed for another bull market, right? But you have to go through this sort of long phase before you can really have the momentum to take you to new all-time highs. This is what history shows us. Again, will it repeat again, right? Will it repeat a third time in a row where we chop around these levels for, the next year or so before really having enough momentum to break out. It's anyone's guess, right? But that's what history at least shows us. And again, I've tried to explain, sometimes history works out, in the context of not calling June the bottom at least, right? Sometimes it doesn't when, if you're always expecting it to play out the same way, right? So you have to be aware of that. Now, going back to this, my sort of speculation here is that Bitcoin will likely not rally up 4 times the low, okay, like it did in 2019. One of the reasons is because in 2019, 4 times the low was still well below the prior all-time high. 4 times the low this time is basically at the all-time high, or at least relatively close to it. So I don't think it's going to make it back up that high. But you can also see 2015 sort of carves out what was the, sort of the bottom part of that range. My guess is that, it's probably just going to chop up both sides for a while. Bears are first in line. Now, another way to look at this is to look at the year-to-date ROI for 2023, 2015, and 2019. And what you'll notice is that 2023 is very much ahead of either of those 2 years. Now, one potential reason for that, at least if you wanted to compare it to 2019, is in fact the halving is going to come sooner than it did in 2020. So the halving, rather than waiting until May, it'll probably come a couple months before that in 2024. Of course, it's going to be dependent on a lot of different things. We don't know exactly when it's going to occur. But if you think the natural progression of the halvings, right, like November of 2012, and then like July of 2016, May of 2020, this one will likely be like, March or April or something of 2024. So in that sense, it's not that dissimilar from that move. But another way to look at this as well is to take an average. I thought that was always somewhat interesting, is to average them out to just get you an idea of what that would look like. And you might say, well, Ben, averaging them out is kind of ridiculous, right? What's the point of averaging them out? And I would probably agree with you in the grand scheme of things. You're likely right on that assessment. But interestingly enough, if you were to average out 2014 and 2022, so if you, 2014 and 2018, sorry, I clearly clicked on the wrong one. Sorry, here's 2014 and 2018. You get this orange line down here. Coincidentally, it essentially ended up being where 2022 ended. Okay. Interestingly enough, right? So yeah, it's probably not the best way to look at it, but why not at least follow it until it's proven to not be useful? So you look at 2015, you look at 2019, you take the average, and that's what this is what you get. So you have 2015 is the line down here at the bottom, 2019 is the line up here at the top, and then the average of the two is the blue line. So that if you get rid of 2015 and 2019, this is what it looks like. This is just the average of the 2 prior years that came after the primary bear market years. And then if you overlay that with 2023, it looks something like this. Pretty impressive move so far in 2023. Do I think that we have, do I think that this rally is going to stop here at 1.4x? I mean, it doesn't have to. A lot of it's going to probably depend on how hawkish Powell comes out on Wednesday. It might depend on, some other things coming out, like the unemployment rate, earnings, and all that sort of stuff. I imagine that will dictate a lot of it. If you look at volatility, at average volatility from the prior 2 years after the primary bear market years, right? So look at average volatility. You'll see that it, in the average, as a function of time, of course, dipped slightly below 1 to the tune of 25% down, and as high as 2.1. So what we're going to do is we're going to look at what that range would look like for Bitcoin if it experienced that range this year. We also did this same video like 3 or 4 weeks ago. Okay, so I mean, again, go watch that video where we also talked about this in a little bit more detail, I believe. But the average volatility as a function of time for 2015 and 2019 ranged from the yearly open 25% down to up 2.1x. Now, if you were to look at that for Bitcoin, where would that put it, right, from the yearly open? So let's go first take it from the yearly open. So January 1st of 2023. We'll find the exact day. It was right here. The open was 16,530. So from 16,530, if it were to go up 2.1x, that means your average volatility from the prior years after the primary bear market years, a 2.1x would essentially get you, that gets you all the way up to 35K. But on the other hand, a 25% move to the downside from there could get you as low as 12K, right? That's just the average volatility as a function of time that we've seen. Now, admittedly, the drawdown that we saw in 2015 occurred relatively early, right? In 2019, the drawdown also occurred relatively early. So if you just look here, both 2015 and 2019, the drawdown for both of them, the max drawdown, occurred within the first month or so, right? And then from there, 2015 scraped the bottom, 2019 generally trended higher. 2023 is starting out completely different, right? I mean, it's more or less, it's only gone up for the most part. One way to better visualize this is to hide 2015 and hide 2019 and just look at 2023, right? It's essentially just gone straight up so far. So, we're getting into that. I mean, of course, people are loving the rally. You're seeing that general positive sentiment return. But in the same way that we've discussed back over here in the summer, in the same way we discussed that, look, I know everyone's excited and hoping that June was the low, history shows us that it's not usually the low, and we normally break down. So then again, what does history show us about 2015 and 2019? It shows us, as I said before, that there's typically a phase where the bulls get wrecked, and there's a phase where the bears get wrecked. That's just what history shows us. And then once both sides are sufficiently wrecked, then we have enough steam to go forward in the years after. To give you a reference as to what that would look like, comparing, say, 2016 to 2020, this is what it looks like. Look at 2016 and 2020. There, the lower bound on the upside was 2.21x and the upper was 4x, right? From the yearly open. So 2 to 4x. Not a bad move. And then from 2021, not too great, right? It wasn't that great in that year. Only about 1.6x or so. But 2020 had the primary bull market phase where it rallied from the lows of 3,000 or so. But again, I mean, you can see when you compare the 2015 year, the 2019 year, and of course 2023, this one's gotten started off to a much quicker start. Now, is there any other evidence to talk about with regards to the likelihood of both bulls and bears getting wrecked this year? I think to look at that, you'd have to look at the monthly charts, right? Look at the monthly returns for Bitcoin. Now, what do we notice here? So in 2014, you had 1, 2, 3, 4, 5, 6, 7, 8 red months. You had 8 red months in 2014. In 2018, you had 9 red months. So you had 8 red months in 2014, 9 in 2018. How many did we have in 2022? 8, right? 8 red months. This was actually one of the charts we used to suggest, right, that good chance June was not the bottom, because a lot of people are going to think it is, but it's not really. We haven't really seen a pretty typical drawdown in terms of the time-based component. So when you look at this, 2022 had 8, 2018 had 9, 2014 had 8 red months. So basically, in the bear market years, it was essentially only the bulls that got wrecked. Now, yes, there were some bear market rallies to keep the bulls interested, but they basically just served to get the bulls wrecked again and again and again and again. Okay? So then what does 2015 show us? What does 2019 show us? Can it give us any insight into 2023? Well, if you look at 2015, you'll see that we in fact had 5 red months and 7 green months. About 50-50, in slight favor of the bulls. But it still was about 5 red months and 7 green months. 2019 was 6 red months and 6 green months, right? So what do you notice? you notice that 2014, 2018, and 2022 were 8 or 9 red months. 2015, 2019, and 2023, well, we don't know yet so far about 2023, but 2015 and 2019 was more or less half and half, right? Half red, half green. I would speculate, again, this is just based on my own experience, that you're likely going to see it play out in a very similar way where you get about half green months and half red months. And once we get through this year, you can start to argue that both sides are getting so exhausted that we can start the idea of a more sustained rally that would also correspond, with a halving for Bitcoin. Now, the other side of this too is think about, well, how long? I mean, so far Bitcoin's up 39% in January, right? If you take a look at history, this is the third best January that it's ever had. In fact, the third best, and the best one was in 2011. Second best was in 2013, right? This is the third best. If it closes up here, it's the third best January that Bitcoin has ever had. We did have a 30% move in 2020. And I mean, that's about the only other time in recent history that January was remotely this positive. So, just something that's interesting to look at. And, with such a strong move to the upside, or at least with some momentum, we'll see if it can continue on in February and March. The problem, right, the main problem in terms of, because I know everyone wants to put on their rally caps to new all-time highs, the main problem is that we still have probably a lot of choppiness to get throughout this year, to get to a point where we can actually sustain a run to new all-time highs. Now, as I said earlier, right, if you take the range from what we've seen, right, if you take the range from 2015 and 2019, the range shows you 25% down all the way up to about 2% or 2x up. So again, for Bitcoin, remember, for Bitcoin, that gets you all the way down to 12K all the way up to 35K, right? Now, does that mean we have to visit both of those points? No. In fact, we probably won't visit both of those points. But I'm just trying to give you an idea of what is the average range that we've previously seen when you look at the years following the primary bear market years. Okay, and these the years after the bear market years, sort of the recovery years, not, they mainly function, I think, as recovery years. They chop both sides up for basically 12 months, and then we get into the following year and can hopefully get a bit more optimistic, right? So hopefully this video has been useful. I know that a lot of people are always looking to know what I'm doing and whatnot, but listen, I don't provide financial advice on the channel. I've said many times, if you read between the lines, you should easily pick up on this, right? Said many times that for me personally, it's just Bitcoin heavy for my crypto portfolio until the dominance is higher. Okay. So, I mean, I know people want me to talk about altcoins. I've seen the comments saying hey, will you talk about altcoins more? But because I still have that conviction that Bitcoin's dominance should go up, it's hard to get that excited about the altcoin market. Now, I will say, you will likely see some altcoins outperform. There's always some that do. There's always some that outperform Bitcoin, even in the bear market year, right? I mean, you go back and look at prior cycles, there's always some that do. My point is that because I feel that strong conviction that the dominance of Bitcoin is headed higher, as you guys, if you've watched my video, I'm not really that fan of the altcoin market right now. Now, that doesn't mean I won't always be that. I mean, I'm not going to always be that way, but at least until we see the dominance of Bitcoin much higher, I still remain skeptical of the altcoin market. Not because they can't go up on their USD pairs. It's mostly just because I still think that Bitcoin's going to outperform them, whether Bitcoin goes up or down. And Bitcoin chopping up here is a great way to send those altcoins down on their Bitcoin pairs. Let me show you one more thing that I thought was interesting, okay? And then we'll wrap it up. So, if you look at Bitcoin's performance in 2019, this is what it looked like, right? Went up, it went down. It first wrecked the bears, and then it wrecked the bulls. And you might say, well, this didn't really wreck the bulls because it only went down, to about 2x up. Well, early the following year, it still wrecked the bulls, right? Because we dropped, and I was one of them. I mean, it completely wrecked me too. I mean, I was one of them in March of 2020. It wrecked everyone basically, because I don't really think a lot of people thought that Bitcoin was going to crash 60%. But again, right in early 2020, you can see what happened, right? I mean, it started to rally. Everyone was getting excited because we're going into the halving, and then it just crashed all the way down, right? So again, what happened? The bears got wrecked, and then the bulls got wrecked. But an interesting comparison to make is look at what Ethereum did during that time. Now remember, in 2019, Bitcoin, it first went down a little, it then went up a lot, and then it went down some. That's just 2019. You look at Ethereum in 2019. Let's just take a look. It went down, it went up, and then it went back below 1. Huh. Okay. So basically what happened with Ethereum is that Bitcoin chopped it up, right? Bitcoin, the constant huge fluctuations in Bitcoin's price to the upside and the downside, the altcoin market, I mean, I don't really consider ETH an altcoin, but the altcoin market in general, it just couldn't handle it. And the dominance just continued to shoot up. So again, Bitcoin ended the year of 2019 up. Even though it bled during the second half, it still was up, a decent amount, like 1.9x or so. But Ethereum was not. It was below 1. Right? It was still below 1. The market, the market can get very, very chopped up during that phase. Go take a look at Cardano and see what was happening in 2019. Look at this. It started above 1. It then rallied on up to 2.25x up or so. And then it came crashing all the way back down to basically right above 0.75 or so by the end of the year. And you can make this comparison for a lot of different coins. I mean, a lot of the coins that are on here now didn't even exist back then. Look at Litecoin. Look at what Litecoin did in 2019, which is its halving year. It typically outperforms, at least for the first 2 quarters in its halving year, right? It started off pretty good, and then the second half of the year it bled back down, all the way back down to 1.32. Remember, Bitcoin was still at 1.9, but a lot of the altcoins, they can get wrecked through this sort of recovery year for Bitcoin. And so that's why I've pointed out many, many times is that, in general, if we want to cherry pick an individual altcoin off of its low, you can always find it rallying against Bitcoin if you want to cherry pick it off its low, right? It's not hard to do that. But when you look at them as a whole, and you take a look at, say, like a lot of these altcoins, and I'm not just going to cherry pick a few. I mean, I'll show you a lot of them, right? You look at Solana Bitcoin, right? I mean, it's still just a lower high. And I mean, I know everyone's super bullish on it, and it could still move up a little bit higher here and still maintain the integrity of this downtrend. But the problem is that we've been talking about this even over here and here and here, and every time we see that capitulation down to these lower levels, everyone gets so excited, and then it pops back up. Or sorry, everyone gets super bearish, it pops back up, and then everyone gets super excited again. Everyone's like, "Oh, told you so." And then what ends up happening? It just ends up being another lower high. And I mean, you guys know I don't own Solana, so let me show you one that I have talked about on the channel before, just to show you that I'm not just picking on a coin that I don't own. Look at Cardano. It's the same thing, right? It's the same thing. It's just a series of lower highs. It's just a series of lower highs. You look at DOT, same thing. It's just a series of lower highs so far. Now, it doesn't mean they're not going to eventually turn around or at least show some type of more sustained relief. Look at Avalanche, right? A lot of these are just a series of lower highs. Could they turn it around at some point? Yeah, it's possible, but history shows us that Bitcoin tends to chop up these altcoins in the recovery year, okay? And, again, one of the things to remember with this sort of this ROI after the peak, one of the things you'll see is that you get these moves to the upside and the downside. Okay, now you might say, well, you're saying it can go up and down. Yeah, that's basically right. I mean, the market can go up and down. My point is that during, just like in 2015, just like in 2019, and likely 2023, it's because, I mean, the idea is that it's likely going to be split 50-50 in terms of the amount of time we spend going up and the amount of time spent we going down. Whereas in the years following that, like in 2016, 2017, 2020, 2021, 2013, 2011, you just spend a majority of the time going up. So that's like the primary distinction between sort of the year after the primary bear market year, and then what goes on over here. So that's why I'm saying, like, I would say going into this year, this is the general expectation, is to just chop around in this range for a long time to get that time-based capitulation component, which is probably more important than just the price-based capitulation component. And then after we've done that for about a year, hopefully we can trend higher. Now, there is always going to be the risk out there. There's still the macro risk. They have not subsided. There still is the risk that we could go into a recession. But, we also, that could still take a while. Right now the markets are rallying because inflation, at least arguably inflation's coming back down and the economy is not yet completely deteriorated, with the unemployment rate still low and GDP last quarter coming in relatively strong. So I think that's probably the primary risk at this point for Bitcoin. So it is important to keep an eye on that throughout this year. But that's where we currently stand. And it'll likely be that type of risk that keeps us choppy and keeps us from going, to new all-time highs, right? So that's my general expectation for this year. We've been talking about it for weeks. Hasn't really changed. Even with the rally, hasn't really changed. Could we keep rallying? We could. Will we likely spend an equivalent amount of time this year going down as up? That's my guess. Is it based on history and my personal experience? It is. That's what it's based on. That's what it's based on. Sometimes it works out. Sometimes it doesn't. For me, generally it works out because I am more risk averse, I think, than most people in crypto, just because I've been burned so many times. So for me, I prefer to just sort of stick with mostly Bitcoin during this phase, and also, as I said, also have a healthy cash position, because there should be still plenty of opportunities throughout the year, whether it's 3 months from now, 9 months from now, I don't know, but to continue to sort of figure out where you want to be positioned before we get into, say, like 2024, 2025 timeframe. Anyways, that'll wrap it up for the video. Thank you guys for tuning in. Make sure you subscribe. If you're not subscribed, give the video a thumbs up. We also do have Into the Cryptoverse Premium at intothecryptoverse.com. I'll see you guys next time. Bye.